Welcome back. Markets this morning are higher. Take a look. We resume a rally for the major averages. The Dow Industrials right now up 58, the S&P up 7.25, and the Nasdaq higher by 39. Yesterday, the S&P snapped a 7-day winning streak. With Oracle really taking markets lower because of its lower than expected cloud profits, dragging markets. Analysts worried about the heavy spending on chips and data centers. And as you can see, yesterday, all the major averages were lower, with the Nasdaq down about 0.2%. Earnings season, of course, kicks off this week. Delta and PepsiCo will report their quarterly numbers tomorrow before the bell. And then the main focus will be the major banks. They are kicking off their earnings beginning next Tuesday with JPMorgan Chase. Analysts expect overall S&P 500 earnings to be up about 8% year over year. That would be the 9th straight quarter of growth. Consolidation also heating up in the banking space. Fifth Third agreeing to acquire Comerica in a $10.9 billion all-stock deal. It's all on for the financials right now. Joining me now is Mendon Capital Advisors President and Chief Investment Officer, also RMB Mendon Financial Services Fund Portfolio Manager, Anton Schutz, back with us. Anton, great to see you.
Always a pleasure, Maria.
Thank you so much for being here. Now, you have been invested in financials for the whole time that I know you.
Yes.
I mean, 2.5 decades. And so we look at the banks with a real wind at their backs right now, whether it's earnings, consolidation, regulation, the Fed. What do you see happening here?
I mean, if you can't make money in these stocks today, boy, everything is just set up here. And by the way, their valuation, if you look at the regional banks, they're at 44% of the multiple of the S&P 500. Never been this low.
Wow.
So it's all relative. You know, I mean, look, I go all the way back to 2000 and go, what happened to some of the high growers in 2000 and what happened to the undervalued stuff?
Yeah.
The Russell 2000, the banks can really outperform. It's just when.
Yeah, well, we've been waiting for the Russell 2000 to really catch a serious bid here. But, you know, tech has been driven by AI. What's the main factor driving the banks? Is it also this AI-driven momentum, or is it just deals?
Well, the AI-driven momentum will help eventually because banks are going to be able to cut costs. They're so labor-intensive on the operations side, on the system side. I mean, Jamie Dimon came out and said, hey, we're now breaking even on what we're spending on AI, but wait until they start actually making money from it. I mean, they used to have COBOL part of their systems. I mean, AI rewrote the programming for their back office.
Wow, that's incredible. So what are you expecting from the earnings period next week?
Well, capital markets have been very strong.
Yeah.
So the big banks have performed really well. I think it's kind of in the stocks. What's not in the stocks are the smaller banks where the valuation differences are so big that this M&A premiums can be announced and can last, and that's where really the upside is as you go down the food chain.
So in terms of the M&A, I mean, we saw a big regional deal yesterday. Where else do you expect us to see acquisitions?
I see every bank getting bigger.
All the regionals?
All the regionals. Look, if you look at since 2018 was the last time we really had a lot of M&A happen in the banking space, the average age of board of directors is up to 66 years old.
Wow.
It was 58, right?
Okay.
It's just simple math. And, you know,
So
there's a lot of sellers.
So what does that mean? They've got to get off the board?
Well, not get off the board, but they're kind of getting tired and they're ready to sell their banks. And look, the investment technology is so critical, scale matters. So if you can get two banks together, and they can spend more money on getting relevant, improving their systems, improving efficiency. That's real.
Which banks do you want to own right here?
I think you can just own the whole regional bank basket.
Okay.
I mean, obviously, I'd love to talk about my fund, but
yeah.
You know, I like banks that can determine their own future. I'll give you one bank, Equity Bank, EQBK. They can determine their own future. They're buying all the little banks around them, creating scale and earnings. Yet they're also a really attractive target as well. I mean, they've got a CEO who could be a successor at a bigger bank.
I like this story coming out of Japan, and I want to get your take on this because Japan's market, well, it was mixed overnight. The Nikkei pulled back after a 4-day winning streak, but the topics hit another record high. Investors are weighing these expectations for new government stimulus under its expected incoming new Prime Minister, Sanae Takaichi, first female Prime Minister of Japan. She is going to face some coalition pushback. Takaichi is holding talks with leaders to address concerns over her positions. No agreement reached. A parliament vote on her premiership could possibly be delayed. We've got to wait and see what happens here. But markets have been celebrating her incoming position. The yen did weaken against the dollar. Any thoughts here on the impact on banks or broader market on what's happening in Japan?
Well, what's interesting is, you know, rates are still up in Japan, right? I mean, the fact that Japanese investor can buy bonds with higher interest rates than they've ever seen is pretty interesting. You know, clearly, you know, stimulus, growth, potentially inflation there. I mean, that's stuff that Japan's never been talked about.
Yeah, it's true. It's a whole new day in Japan. All right, what about the Fed? We've got earnings which begin this week, and then you've got a Fed meeting coming up in a couple of weeks. Officials seem split now on whether or not we're going to see another cut right away, or are they going to wait? Now, the yield is down 1.5 basis points this morning at 4.11%, but Fed Governor Stephen Mnuchin says a calm bond market backs his call for more aggressive easing. He wants a 50 basis point cut. You've got Minneapolis Fed President Neil Kashkari warning drastic cuts could reignite inflation. Atlanta Federal Reserve President Raphael Bostic says businesses no longer see catastrophic risks from tariffs, even as consumers become more cautious on spending. So you've got a mixed story here within the Fed on how big another cut will be and when will it be?
Well, first of all, I think 25 basis points is done.
Baked in the cake.
It's
for
happen.
this month.
It will happen this month. I mean, and I was at an event yesterday Deutsche Bank hosted that Mnuchin was at. He was very impressive. And what he really talked about was there's easy money, yes, in the stock market, but there's not easy money in the housing market. And that's very true, right? There's just not a lot of activity there. And I think there needs to be, one, lower rates, period. You can't just mandate it by the Fed doing it. But I do believe that there's a bifurcation in the economy. And AI is part of it, right? There's jobs being eliminated because AI is creating efficiency all over the place. What are those people going to do?
Yeah, what are they going to do?
And that's a real issue. So you've got to create some stimulus down at the lower end, not necessarily for the stock market, but for the housing market. And I think absolutely we have a very tough housing market for people from affordability. So you've got to lower interest rates if you can.
Does that housing market affect where you put your money in terms of the big banks, the biggest lenders?
Well,
I know you always like Bank of America for a long time.
Look, they're a strong bank, and for sure, we're creating some succession. But what you're going to have, particularly even at the smaller banks, so the big banks kind of push it away, is mortgage, right? Rates come down. Mortgage is a great earning source for regional and community banks, and I think that's not in earnings estimates.
All right, we will leave it there. Anton, great to see you.
Always great.
Thank you so much. Anton Schutz joining us, expert on banks. Stay with us. We'll be right back.